Hello guys, welcome to Nifty Alpha Trader, and today we are going to discuss on the live trades which are open positions so far, and also look in depth on what analysis we are going to do and how we are going to break these trades and see them individually, and how to also do a risk management on top of it. So let's get started. Yeah, cool. Now this is basically why I'm doing this, is just for homework purposes. It's not actually here. I'm giving a disclaimer that I'm not a severely registered investor or a trader. So whatever I do is based on completely my studies and my thing. It is not, doesn't have to be the way the market works. So just don't take this thing. This is just a vlog and for educational purpose, and also like a vlog which I am doing it for myself. Also, if you can learn from this, it is good. The data mostly is available everywhere, so you can go through that data, but ultimately this is just for a homework sake. Okay, now let's get started. So seeing the trades, so far it is in 22k loss, but virtual trades are actually in quite profits. There are not really so many things I have updated, and even this journal I have not updated, and I have not taken any massive trades on February because of the fall. I was predicting it, but not taken any massive trades. And January I have not updated DLF and this one yet, so I have to do that. But I have not kept it after this. I've removed most of the positions and taken quite small trades, and they didn't go well, but it's not journalable, but I'm breaking my own things. And now I am basically in somewhat decent, not such a great return, so I'm still learning, and this is basically entire journey which I'm doing. So let's do an analysis on what we have here. So seeing first, let's go with Amar Raja, or let's go with the existing JSW Steel. So I like to go mostly with JSW Steel because I have kept most of the capital margin here. So this makes it intensive and high risk, high reward trade. The risk is has to be mitigated, and if you're seeing on Monday, basically we are getting some theta decay and it would be in a good position. So what I have to do on Monday, based on the data which I'm going to study now, is what is going to happen. So so this is my own software which I am trying to develop, and so based on this, the data, what we would be seeing is, I will just move my face to top here somewhere. That would be better. Yeah, now if you're seeing the data here, it's basically giving us 3 or 4 data entry points. So here, if you see, the price has changed a lot, and there was a lot of short covering which happened. Short covering can't be mostly every time a bullish way. Okay, short covering indicates a little bullishness, but there are short buildups which we have to see how much OI has been built up that day. So if you are seeing the impact, overall impact, OI impact percentage on the entire overall buildup, it is not so high. And if you're seeing overall buildup is still negative, and the market is yet negative. So our positions right now might be in somewhat in a good position, but let's say if we have some position like this, it can be much better than having it like this. I'll just keep this on for now, but overall we have two C's which are basically protecting and acting as and these are acting as hedge because of the sudden up move. So the last thing which I've done is sold 620p on this, so which is basically managing the position. And and then the market was little down, but let's not care because up and downs are common. If an option seller has to be more patient, so I am trying to be more patient, but there are a lot of adjustments which are going on here, and whether I'm updating that on here, I have updated most of them. So yeah, this is fine. Now coming back to this one, the trade price changes. If you are seeing, the price changes were massive, but followed by OI, the OI has decreased. That means there was a huge short covering, but overall trend looks like a short covering, and it has to be a massive move for that to convert into a long build up, and there is huge shorting which has been happening. Now what we have to see is, where did the short build up start, right? There are few places where the start there are short buildups. If you are seeing here on 14th, there is a short buildup, and on 17th and 21st. Let's see on the chart and draw these as a resistance lines, or basically short buildup lines, where most of the short buildup has taken place, right? So I'm going by the dates. These highlighted dates are when there was a long build-up and there was short build-ups. So I'm going to JSW Steel, and I've noted down what all trades I wanted, but I'll keep this as this one. And now if we are observing this is 30 minutes chart, and let me go the latest one. And okay, now the journey started here in 28th. Let's see the first date, 14th of February. The crash has started. This is what I call the Valentine's Day crash, right? 14th of February. 14th Feb is here. When this crash happened, there were a huge short buildups here. This is the exact point of the short buildups. This is when they started. So we can basically draw this as a resistance line. So this is a strong resistance line which is forming on 14th. And then what happened is, again on 17th, there was again a huge short buildup. If you are seeing the volume changes were good, and it is around 1 million contracts which were there, and here there are 3 million contracts. Out of 5 million volumes, the OI change was almost close to even 1 million. It is like barely changed, but ultimately the volume was huge. So whoever was taking a short covering position, they basically turned a short buildup, and the OI was fine. And now if you are seeing, it is 40 million was the OI, which was there in short buildup, and slowly coming to the other short buildups here. There was a good change, and OI didn't really do a massive move. If you're seeing, there was a short buildup here, where the volume OI change was positive also, but the volume was negative. So this will be another few days, 2 days, that is 17th and 21st. Where is 17th? 17th is here. Is 17th. There are other short buildups which happened here on 17th. If you're seeing, I'll move it to the top. I won't keep it here. Again, keep a line here, and on 17th, this is 17th, now again on the top. So these both acted as resistance. Now what's happening is, the market is right now has taken this range. So this will be acting as a resistance, and this can act as a support, because the long build-up, we have to see when did the long build-up happen. If you're seeing the long build-up, the recent long build-up happened on 28th. When is 28th? Feb 28th, right? Feb 28th, it has reached this volume. So this will act as another support here. So we have one support at 620. The other support, the middle zone, is acts as a good support right now. So this is where the market has to consolidate for some time. That is till March 23rd, let's expect, and then it can spike up or spike down, but ultimately we can basically consolidate in this range because the resistance has already given a signal, but there was some huge volume which is going here, and then you can see it acted as resistance, but still it broke. So the consolidation really worked, and this consolidation is indicating that it might consolidate and it can have a sudden up move. But let's see the overall industry. It's not just about sometimes, just by futures data you'll get what are the real market thinking. So the real market right now, even now, it is short from this levels. So it will continue because most of them might also be have started here, and it is always acting as a resistance zone. This trend is purely a resistance zone, so it can bear it till here, till 680, and again go down. So the level is again 650 and 640. So I am not expecting a sudden move, but it can be a sudden move. If you are looking here, it can gap down, and it came straight down here, and it also gapped up on this day. So this has to be a clear resistance. So right now I'm thinking that it would be a good resistance for me to capture this move. Then we are keeping this as a good resistance, right? Already I've kept it here, and now we'll go to the OI changes and other things also on top of this. So before that, I will remove all the existing data, like this resistance which was already there, but this acts as a previous data. So if you see here, I've added this till today, and this was a strong resistance, that is 680. So far it was this, but now it might be, the resistance might be at 680. So I'll update it here. So this was the basic, the resistance has changed to 680 and 700. Let's observe the option chain after this. The option chain of JSW Steel, open interest of JSW Steel, if you're seeing, there are for last 1 week the huge OI build up in 680. At the same time, all the calls here washed out, and in historic there are also few calls left, but whereas the resistance zone at 7, again at 7 it is depleting, but 680 is the only call which has remained overall this week, and the remaining calls vanished. And then if we go to the previous week, there was 680 was the only call option in JSW Steel which stood out, and before that also, if you're seeing 650 and other things which all vanished with this sudden up move. But ultimately the point what we are trying to look here is the theta decay might have got them the money which existed. I was having 670p which I sold for a decent loss, but ultimately the point is what is happening this week. So if you're seeing here 820, but everything is vanishing here, so it is clearly indicating a bullishness in open interest of options, and previously it was bearish, now it's turning bullish. And if you are seeing here also, the new short coverings might also indicate that it can turn bullish. That's the reason I am having some that's the reason lastly what we are trying to do is having this position in hand, that it will be in this kind of position for some time. So until we get a clear signal from the market that there will be up or down position, this will be the position. And if the market indicates a strong up move, we can also buy in at the money or in the money 680 and decide based on that, right? So the entire move, why I sold this is only for that purpose. Otherwise I could have left it empty and go on with this one. And this one I have sold it at 9.2, which was at a decent price, and also exited from 640. So that is a decent profit which we are expecting. Overall, the trade looks like, the recent trade of JSW Steels looks like this, and we are in decent losses right now, not so aggressive. If you are seeing the risk is to reward here, ultimately, if we go through this, the risk is to reward is quite fine right now. Out of 70,000, we are still at minus 4,000 loss. That is perfect for a proper risk reward trade. And on top of that, we have already made some money here, which is around 12,000. So if we mix it with this, but I am treating this as a different trade than that, because I've exited this complete trade and again entered it because of a good valuation. And also that was the entire picture. So what we are trying to look here is, we are continuing this as a strong resistance. 680 would be the strong resistance zone, right? So we will keep this 680 to 7TC. If this breaks, if it breaks above 690, that is when we have to basically trade in a different view. But it can be a false breakdown. Only based on the OI data we can decide if this is a false breakout or not. But if this breaks out, it will turn extremely bullish, and then we just have to exit with some losses. That is what is going to happen here if it is moving extremely bullish. But the data so far doesn't suggest that it is going to be extremely bullish. So the overall buildup is bearish. Now JSW is done, JSW Steel, because it's the highest position. So I'm relying on this and will exit if it touches. How much loss should I take if it touches 690? It is around 20,000, that's 18,000 loss, which might happen in 14th March, that is Monday. I'd get more loss, but ultimately that is the risk we are taking on top of that, right? So we'll be taking 7,000 loss for this one, but ultimately let's see what's going to happen, and if there are any active adjustments. But I'm not thinking to adjust this actively because the data is clear, and exiting would be the good strategy. And now coming to Ashok Leyland. The next one is Ashok Leyland, because this is another risky trade which had huge IV 60 and 55 IV, and it has been going up 7%, and then the next day it has consolidated. Let's see the logic behind what's happening here in Ashok Leyland. So So Ashok Leyland is extremely confusing in terms of future. That is why I've created this one called OI Impact. OI Impact is basically a new way of understanding how much OI was impacted here and how much OI was impacted in each OI changes dates. That is, if you're seeing here, it has been the huge impact. There was a huge impact that is 3.75, which is 8% increase in the OI, right? OI change. That is from 21 million trades, it has become this one, and it was a short build-up. And immediately the next day, from short build-up, it has turned to a long build-up, and it has depleted here. And this shorting here, if you're seeing, this shorting is further continuing, is what I am hoping for. But ultimately, if you see here, what's happening is 3.4 million is the new long build-up of after that. So it gives a huge confusing signal. These both together give a huge confusing signal whether it is long or short. But if you're seeing someone who is long here, again, this change was minimum. So this is giving a huge confusion. So what we have to look in this kind of scenario is we have to look at this one, which is long build-up. What's happening here with the long build-up is from within the 5th day, what is the change which happened? That is 5 days before from now. It was at 91, and then they were like 41.4, and now the build-up is 46.9. That is huge long build-up as a whole. So this is the percentage OA change from the last 5 days. So usually what we can understand is this is long build-up, but overall picture, if we see, there is a overall build-up is still negative. That is, it can remain bearish, so it is giving a mixed picture. So it can be neutral or completely break out in one direction. And what's happening with Ashok Leyland is dangerous, in a dangerous situation. Why did I take a trade when it is in dangerous situation? Because the risk is to reward is favoring us in some time, and I have taken this at the end of the day. So the theta decay will be huge, and we can basically adjust with at the money options or selling, making it a different strategy altogether. Something like JSW, if you are observing here, we can basically ladder it with another strangle, or we can also do other various strategies which can avoid us massive losses. But ultimately I'm expecting a good theta decay, so we might be in a good risk to reward ratio. So the maximum expectation from here would be around theta decay, that is 40 is what is expected from here. So it should be around 15,000. Out of what loss, it would be around 2 to 3,000 loss is what we are expecting here. If we are making that loss, or we can exit from that, it is much greater scenario. But let's avoid this right now. So Ashok Leyland is giving a mixed picture, where it is giving a huge long build-up, which is massively increased, but overall build-up is still in negative. Now coming to this OI, open interest. Open interest also might give you a huge confusion in Ashok Leyland because it has massively moved. So now is where you have to see the price action and where it plays. So these are all the points where massive trades happen, and everyone is in the great confusion. But if you are seeing, if I remove all these lines and draw pure line based on not monthly, weekly trend, it has been bearish. And overall, not just Ashok Leyland, overall auto segment is down. If you're seeing Tata Motors, even after the market consolidated, if you're seeing, it has not yet reached the market crash from 23rd, where it is still trying to pick up, but ultimately it is basically in a consolidation area. Overall, I think they might pick up, because if you are seeing the volumes here, it is basically indicating that it would be in a good consolidation area. But in the case of Ashok Leyland, it has to do something like this. Let's see on a daily chart what's happening. So there is huge, still a bearishness in this. And if we go by daily, if you're seeing, this is in daily also, if I can add EMA here or SMA, moving averages, exponential, yes, I'm setting it to 22. So it is somewhere here, it has to cross this, and then that is when we are going to exit this trade. That is, this figure is at, if you're seeing 60, until then we will basically adjust on the small and up moves. But what I am thinking is we can exit and enter once the move is done, again enter and again exit. So frequent entries and exit with small profit taking is what we can expect from this trade. And apart from Ashok Leyland, so this is what I'm thinking, but we'll go even with the options data and max pin data, so we can understand much better. Even in JSW Steel, I have to go with max pin data once again, but that won't change. Ashok Leyland, I've already created a video based on Ashok Leyland, which can give a picture on what's happening. So Ashok Leyland, there's a strong OI build-up here, and all the puts are gone. Puts might have been created because of the downfall. So most of the investors might have turned into buyers rather than sellers, and now they might be exiting, or let's think like that optimistically. And now there are huge, and the calls have been created. This indicates basically a bearishness, and historically 120 is a strong resistance, and it is sticking out. And now also there are few contracts which are being created in one day. And if I'm going to 14, again there's a huge bullishness bearishness which you can see by this call OI in this week. Before that, from 25th to 4th, it was it here, and then there were so many puts which are created, and again use some common sense. These puts might have been created for the sake of down move, and this might be mostly as a hedge to their futures or selling based on the exit of their futures. So this can give, okay, let me show how an institution might do this. Okay, so I have, let me say Ashok Leyland. So if I am selling this one, okay, there were huge even here when it was in that is in the money, like exactly at the present situation was there. But what they might have done is they might have already shorted this, right? They might have shorted it at let's say 95 or something like that range, and then they want to have basically a good upside hedge or something like this. Okay, sorry. 15. So they don't want to have more downsideness because they might have bought it and then they are planning to buy this out as a safe side. So this is the only probability which I am seeing, that whoever was there was securing their position in the downside. That is why this has been created. At the same time, as the premiums are good, the sellers might have sold it, and the rest. And here there is a lot of P's which are created in the money puts. And if I'm going back, if you're seeing this 120 are also becoming 110, so many people might have exited. And again, let's go to 125 now, and 120 again was a strong resistance, and 110 was not, and 110 was a strong support back then. But it has changed from 120 to 110. 110 is now a good resistance zone, but if it breaks again, 120 will be the strong resistance. So basically it should play within this zone is what we are anticipating, but it might not be. So even let's check the max pain of this one in Optra. Max pain is exactly it, 105, 107, 110. So market is ready for the down but not up. The major loss will be when it goes up and calls. So most of the thing is clearly favoring a downtrend in this. If it moves above 117, then again there has to be huge hedges which has to be created accordingly. So this basically indicates there is a bearish view even on this, but nevertheless we will always be ready for adjustments. That is what we have to do. So what can be the adjustments? I can exit this trade and re-enter it. That is the number one option which I am having at my hand. And the second trade will also be, if it's going down, waiting for the theta decay, and then again getting it once the IVs are back. And now going to these are hedges basically for the lots I hold. And then Ashok is fine. Let's go to Amara Raja batteries or Amron batteries has taken a huge downfall, but now if you're seeing there is a long build up which has happened, and short covering and long build up. But if you're seeing the overall trend was always bearish because of various things which are going in the state of AP, but ultimately it is bearish. It is trying to be bullish. So let's see what's happening with the OI of Amaraja. So where I have this Amaraja, I've already posted some logic in my group, so I'll just see whether I have that. So it would be much faster and easier because the data points didn't change that much. Discord is slow. Now, okay. Before that, I'll just explain the trades here itself. Open interest of Amar Raja. So huge resistance in this zone, but again, this was washed out completely. That is, everyone has told this, but ultimately, if you see historical calls, there are again so many calls which are here, which has to be reduced if there is an up move. So I think this will be a good resistance right now. At the same time, if we see the dates from last week, this was again a strong resistance which has held this zone, and again 580 to 600 is a strong resistance zone which I think will exist further and persist. If you see on even then, 580 was a strong resistance and it's holding it still. And now if you are seeing the other one, now here again 580 was already there was already call building in 580, so clearly 580 is a winner. In this case 580p is a winner, but if you are seeing also long buildups, there are not huge long buildups but also only short coverings which are happening. So the long buildup happened, but it was not such a great impact on overall thing. It has bare minimum impact, so this might not turn up to be a good one to go bullish on. There will be a bearishness by this, but what I will do is basically in Amar Raja, what I was planning and what I shared in the group was this one, that I might most probably exit this or exit this one with some losses, and then I'll continue this move. This will basically give a good advantage of the overall price which I am holding right now. And if you see if it is at 50, if I exit this, what will I do is I'll do something like this. It's not clear in this way, and if you are seeing the IVs are not so good that they will deplete, so I won't have any IV game. If it is moving down massively, then I'll have something, but I don't think if I am buying this back, I will sell one more 160 or something like that, or I'll move back and buy 540 because that was a strong support area. So ultimately it will remain in the same position, and once the market consolidates after a week or something, I can take some profit. So these are the existing trades and what I am trying to do. 1 hour to explain, and I guess that's it from my side, guys. I was just making this as a video for myself. Again, if you enjoy it, if it's a lengthy video, I know it's a lengthy video, but I just want to know how I do my homework, and this is plainly for my homework. And if you like it, you can like it, or you can subscribe to me if you want more information. And I'm not selling any product or not a tutorial. This is just for homework, and I don't really want to help anyone apart from myself. So I've started a community where retail traders talk to retail traders. Am I a retail trader? Yes, I'm a retail trader. If we are doing our own and handling our own money, and basically I'd like to say I'm a startup more than a retail trader. I hope you enjoyed the video, and if you want anything in particular in detail, I can even explain that. That's it, guys. Okay then, see you later. Bye.